Welcome back to the Anthony Lee Crypto Channel. Today we're going to be going over what I consider to be the basics of trading, and that is the value area ranges. When I first started trading, I started with value area ranges, which is considered the basics, entry level stuff. I got good at that, and I thought, I can improve my game if I went a little more technical, a little more sophisticated. So I brought in extra indicators and all the fancy stuff and got a little more complicated and thought I would improve my trading, and actually my trading went down. So I've made this long journey through trading to wind up right back to where I started with, which is the value area ranges. This is the basics, the backbones of what I use to trade with. Now, what are value area ranges? Looking at the Bitcoin chart here, I'm looking at it on the daily. Now, you can use value area ranges on anything, monthly, weekly, daily, 4 hour, 1 hour, 15, all the way down to the 1 minute, whatever you want to do. You can work a value area range. I personally prefer the larger time frames. I prefer the daily and maybe even down to the 4 hour. I will get down to some lower time frames if I want to find good entry points, but for the most part, I tend to stick with the daily, maybe the 4 hour, and even the weekly for longer. But daily is kind of my go-to if you want to find success, at least with what I've found success with. So, what is the value area range? Well, let's look at this chart. This is the Bitcoin chart going back to 2023. We can go back to full history, but this is good enough. Do you see how this looks different from this? Like they're clearly in two different ranges, right? So all of this would be a range. All of this would be a range. All of this would be a range. This is not a range. This is moving. This is moving from one range to the next, right? So that you could just eyeball it and kind of find what a range is. Now, once you've kind of established an approximate range here, you want to throw on a value area range indicator. And you'll find that right here. You tab over to the side and you go down and it says fixed range volume profile. That's what we're looking for. Now let's just take this one in the middle here. Now it kind of looks like it enters this range around here. So we'll click there and it looks like you exit the range right around here, kind of shoot on up out of there. So we're going to click in the beginning, come over here and click here, and it's going to give you these blue line, red line, blue line. I call them blue line, red line, blue line. This is the top line is your value area high. The bottom blue line is your value area low. And the red line, let me zoom in here a little more. The red line is your point of control. Now, the point of control, if you look at these spikes over here, you see all these spikes? The point of control is the area where the spike sticks out the farthest. That indicates the area in which the most volume was traded during this range. So that's a high volume area. Price tends to react there really well. Price reacts at each of the blue lines really well. Sometimes it goes a little above, sometimes a little below. And this one goes significantly below on some of these, and that's okay. We don't mind that. We're trading the range. So once you have a range established, this will be real easy to trade, by the way, when Bitcoin comes back down into the bear market, because you will have history with Bitcoin. You can already establish these ranges so you could extend these lines over. For example, I'm getting ahead of the game here, but let's say the bull run was over and Bitcoin was to come crashing down here. You'd have ranges here, little ranges here until it got way down into here. You would have your range here. TradingView's kind of freezing up on me there. Sorry about that. So you would be able to extend these lines over, and you would already know when it comes here, you're going to have a range because you had a range here. So you should have a range here to trade when it gets there. You won't have to wait for it to establish a range. It's already been established by price action in the past. So anyway, back to our range that we're using as an example here. What I like to do is when it hits a blue line, I enter a trade, no matter what. I get a little more technical. I'll look for divergences and things like that. But if you were to just go blind here, I mean trading blind, you would enter on this bottom blue line, enter a long, take a little profit here at the point of control, and exit the trade at this line and re-enter a short when it came back into the range. So let me give you a for example here. Price came below the line here, and of course we would trade this back here, but let's just say we just started here. We already have a range established. Price comes below this blue line, okay. We watch it for a little while. As soon as it comes back into this range right here, as soon as it comes back in right here, we would enter our long, okay? So we're riding this trade. It comes back down. We're still in the trade. Comes back up. We take a little profit right here at the red line, right? But we don't close the entire trade. We stay in it, ride it to this blue line, and boom, exit the trade. Or if you didn't want to exit, you could take a little more profit there and try to see if it left the range and you made significantly more. Now, once it comes back in to this range, let me clear all this off. Once it comes back into the range, which it did just a couple, these are on the daily time frame, so each candle represents one day. So we took profit here, it left, came back into the range here. Now, we're going to enter the trade as it comes down. Boom, we're going to take a little bit of profit here. It's going to come back up. We're still in the trade. We're going to come back down, still letting it go. It comes back up. We're still in the trade. Comes back down because we're waiting for this bottom blue line. We ride it all the way down here and take our final profit here. Or more profit, like I said, and you let it continue to go down to see if it comes back. Now, we're out of the trade. And what happens? Price comes down below, right? So we're not in this portion of the trade, or those of you who didn't close the trade, you may still be in here a little bit, but I'm out. And once it comes back up in, I'm entering my long, right? Entering the long. I'm taking some profit here. It comes back down a little bit. Boom, comes back up, hits the blue line again. That's where I close my trade. Now, this one did not go above the line, so as soon as it starts coming back down, I can immediately enter a short because it's clear it's not coming above. So I can immediately enter a short, take some profit here at the red line, ride it all the way down to the blue line, take my final profit. Now, this may not seem like much to you, but this range on Bitcoin at the bottom is $60,000. At the top is 70. So this is a $10,000 range. So if you had enough leverage on this that you're going dollar for dollar, so every dollar the price on Bitcoin goes, you're making $1. On each of these plays, you're making $10,000. Now, if you get your leverage a little more or a little less, you may make a little more or a little less. But if you're just going dollar for dollar, which is fairly common with Bitcoin, I tend to set my leverage at dollar for dollar. And we'll go more into leverage and how you do that later. But dollar for dollar, each one of those you're making roughly $10,000. And let's see how many of these trades we had here. So we did enter a long here, 1, 2, 3, 4, 5, 6, 7, 8. This would have been a losing trade. 9, 10, and this final one would be a losing trade. So you would have had 10 winning trades right here, just blue line to blue line to blue line to blue line to blue line, so on and so forth. You had 10 winning trades here. And 2 losing trades, depending on where your stop losses are. But as soon as it got back into the trade, you would have entered. So even if you got stopped out here, re-entered here, it still would have been a winning trade eventually. You got stopped out here, you re-entered here, it's still, you're getting stopped off for minimum loss and maximum profit. You had 10 winners here at dollar for dollar. These are $10,000 ranges a piece. That's $100,000 in profit. And this range went on from February 28th of 24 until November, looks like about November 2nd of 2024. So what is that? 7 months. So in 7 months at dollar for dollar, if all you did was trade blue line to blue line here, you'd have made 100 grand. That's it. That's all you'd have had to do for this particular range. You wouldn't have to do anything else. You wouldn't have to know a single other thing about trading. In this particular example, this particular range, you would have to know nothing else about trading but long at the bottom blue line, short at the top blue line, take a little bit of profit at the red line. That's it. And you made 100 grand in 7 months right here. That's if you did nothing else on dollar for dollar leverage. Again, you increase your leverage a little more, make it a little more, decrease your leverage, make it a little bit less. You can learn some more technicals to where you're adding to your trades. You know, you're getting here to this red line, you're taking some profit, but you're also entering a short. And then you're closing the short when it hits a certain Fibonacci retracement and letting the rest of your long ride. So you can manipulate here, and I'll teach you that stuff in later videos on how you can make more profit to maximize this range. But if you did nothing else but trade blue line to blue line, you're 100 grand richer in 7 months by doing this method. It's by far the best method I never stray from blue line to blue line. I may find some more short-term scalps here and there as I go within this range, but this is the basics. This is the bread and butter of how you'll be a successful trader. Trade the value area range, and eventually you will lose a trade. Like, for example, every range, there will be a losing trade. That final trade right here, you will lose this trade because price will not come back. But that's okay. You just sit out and you wait, and it will establish a new range like this. It finally came up here and established this range. So we got this range, and we could throw on a volume range profile here. It starts about there. That's tough. Ends about there. And this is from November to February, so a 3-month range. And you can see year-to-year trades on the blue line and blue line. Same thing. Blue line, 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 blue line. And then you finally lose this one, and it establishes another new range. So you got 1, 2, 3, 4, 5, 6, 7, 8 trades. 8 trades here. 8 good trades of a range of 102 to 93, about $9,000. So in this 3 months, you made 8 times 9, $72,000. So this is 3 months plus 7 months. In 9 months, you would have made $172,000 just trading blue line to blue line. So I hope I didn't overcomplicate this. This is the basics. And if you have questions, feel free to ask them below in the comments. Like and subscribe to the channel. Click that notification bell. We'll be going over some more basics, and I'll be happy to break this down for you in a more simpler terms if you need that. And we can get you all on the road to successful trading.